Have you ever thought about how economic decisions affect your daily life without fully understanding the reasons behind them? Rising prices, fluctuating interest rates, and an economy that sometimes seems out of control. These changes may seem distant, but they directly influence your personal finances. But who makes these decisions? Why do we need an institution to manage all of this, and how does it work? Central banks are powerful yet often misunderstood institutions. Their main role? Maintaining economic stability by regulating money and interest rates. They have a direct influence on inflation, credit costs, and overall financial stability. Take the example of the Federal Reserve of the United States, Fed, one of the most influential central banks in the world. Although it is based in the US, its decisions affect the global economy, including the UK. When it adjusts interest rates, it can impact borrowing costs in the UK, influence foreign investments, and even affect the value of the British pound. As a result, the Fed plays a crucial role in the British economy, despite the geographical distance. On the other side of the Atlantic, the European Central Bank, ECB, also manages the financial stability of the Eurozone. Its objective is similar to the Fed's, to control inflation and maintain stable interest rates. However, unlike the Fed, the ECB does not lend directly to its member states. It primarily intervenes by purchasing sovereign bonds from Eurozone countries and adjusting monetary policies to support the economy during crises. These decisions have a direct impact on national economies, but they are made collectively, which makes the system more complex. But these central banks, despite their public role, are not immune to criticism. Their power can seem disproportionate, and rumors sometimes circulate suggesting they are controlled by financial elites or private interests. However, these institutions are supposed to be independent from governments and act in the public interest. Nonetheless, their influence on financial markets and economic life is undeniable. Let's take a moment to look at the creation of the Fed. In 1910, a group of American financiers and bankers secretly gathered on Jekyll Island to prepare the creation of a central bank. Their goal was to stabilize the U.S. economy, which was plagued by frequent financial crises. This group worked in secrecy, but once the project was revealed, the Federal Reserve was established in 1913, transforming how the American and global economies would function. Today, the Fed and the ECB play a key role in regulating the global economy. Their power is immense, but it is also limited by rules and control mechanisms. While their independence is often questioned, they remain essential pillars of our economic system. Central banks, despite their sometimes opaque nature, are major players in global economic stability. Understanding their role helps us better grasp why decisions made thousands of miles away can impact our daily lives. Whether it's through inflation, interest rates, or economic crises, their influence is ever present. It's a complex system, but one that is vital for the proper functioning of the global economy. If this video helped you better understand these issues, feel free to like, share, and subscribe so you don't miss the next insights.